This video is a replay of a trade I took today. Now, it probably goes without saying, but I'll say it anyway. I am not a financial advisor, and trading entails risk. Just because I got these results today doesn't mean that I can get these every day, nor that you can. Remember, the entire premise of the investing project and the $1 million experiment is that I am not an expert, and yet I am learning how to do this. So for heaven's sake, don't just blindly copy me. Instead, find a mentor, someone who is an expert, and join their community. Pay for their mentorship. This approach has worked very well for me, and it likely will for you too. So use this video partly as education and partly as inspiration. After all, if I can learn this, you can too. So good trades today on the ES and the YM, the micro ES and the micro YM. We had a pullback, as you can see here, to start the day, and a pretty substantial one at that. And then we started to get a bounce. Now, I wasn't thrilled about the bounce on the ES because, frankly, I would have preferred it to be down here at the previous day's low. But it was at the previous day's low on the YM. And so I got in on this one, but I really liked the ES from a setup perspective better because I could get my full size and didn't have to take too much risk. So I ended up taking them both, but I kept a tight leash on both because I had put on two trades at the same time. So that was a little bit risky, but I nevertheless moved the stops to even fairly early on, which ironically is the thing that's been backfiring on me recently. But when I have two trades on at the same time, I feel like it's appropriate to do that. So the first one to trigger was the YM, just barely, and it got in at 52,540. I was late getting in on this. It should have gotten in a little earlier, like probably right here. But even if I was waiting for the second candle, I should have got in probably about 35 points earlier. In any case, I got in with 4 lot instead of 6, so I downgraded that a little bit just to contain the risk because I did need to move this stop down a bit, so it ended up being a larger amount of risk. But once it had moved 100 candles in the right direction, it moved to break even and I could relax a bit. But the ES is where I said, you know what, I'm going to move this manually. After 10 points, I moved it manually instead of waiting for the 15, just because I didn't want to take a chance that it was going to rebound or bounce back. Then, of course, it went up and it split the contracts in half, hit that first target, or almost hit it. It teased me a little bit, but did eventually get there. And we'll just let that go ahead and play out because there is something interesting to say about both of them. And we'll let this one go first. Because the first target was hit at 20 points. That is what is that? 2 contracts at 20 is $200. And then this one on the YM, also $200. It hits the 2 contracts at 200 points. So there we are. Now, what was interesting here is I started moving the second contract up to just below the previous 5-minute candle. And I did that for throughout its rise here, just to make sure I'd locked in some profits. Same sort of thing going on here. And what I actually did is I think I ended up getting, I can't remember where I got stopped out, but on the ES, it made it looked like it wanted to get to that second target, but it didn't quite get there. And it ended up coming down and stopping me out. And I ended up with, what did I get? 25 points on the ES for the second one. So I think I was up here now by this point. Yeah. So at this point, I'm out of the ES. And this is where it begins to do its little bit of a retrace. And it felt like, okay, well, you know, I managed to sneak all I was going to get out of it. That was $450 total. And that's not a bad trade for the ES. It did eventually end up going higher, and I wasn't in it. But nevertheless, this is one of the reasons for having parallel trades. They all respond slightly differently. And what happened is at some point, the ES decided to get out of this flagging pattern and shoot upwards. And when it did, the YM followed suit. And what I decided to do is actually increase this by another 200 points. So I moved this up to 53,040, I think it was. Let me just put that up there, something like that, 53,040. Yeah, I think that's what it was. And then I just let this run. And I had some errands to do, and I went out doing them. And sure enough, it actually triggered. So I lost out on a couple $100 on the ES having dropped out. Actually, it was $124 I missed out on because it didn't go up and hit that last target. However, I picked up an extra 200 just having moved this up. And I'll show you what it looked like when I decided to move it up, because that was interesting. So we have, yeah, here's where it starts to break out. So the ES had been sort of stuck in this range for each of these is 5 minutes for like 35 minutes. And then it started to break out. And that's the point at which I said, okay, I'm going to raise the YM target up another 200 points and see if I can't recoup some of this. So I believe I ended up moving this stop up to right at just below this range here, I think. And then I went out on my errands, and sure enough, you know, I'll let you watch this if you feel interested. But the bottom line is this ended up going up, taking out the top, and then selling off quite hard. So it ended up being just the right amount. And I think there's an important lesson here too, and that is, how did I know to put it there? And the answer to that is I went to the ruler here and just measured the distance between that and the top of this range, and I found it's about 400 points thereabouts. And so I ended up saying, all right, well, if that's 400, you know, where's a good place to put this if I were going to measure another 400 from here? And I think I went to I was at 53,040. I said 300. I think I ended up deliberately putting it just slightly earlier than the same size here, just because maybe it doesn't have as much energy to get through the second half. So so I put it there in any event, and it went up there and hit it and sold off. So let's watch that, see what happens here. Now, if I had actually been sitting in front of my computer, I would have been moving this stop up to you know, various different. I might have even put it at a point where I would get stopped out before it actually got there, possibly. But I certainly would have been moving it up as I went, or as it moved up. However, I wasn't sitting here, so it just went up and triggered the target on its own. And there you go. That was an $1,150 pair of trades here. So 700 on this on the MYM and 450 on the MES. So I'll take that. And what's interesting here is that this almost as soon as it had triggered that, it turned around and sold off quite hard. And I always find that fascinating. That it's a game of inches, and this just happened to be the right level. And it's not that surprising. I mean, the reality is I was building this proportionally. So I put the target in a relatively similar proportional size to the first leg of this run up. And so it's, you know, I don't think it's entirely a coincidence that this happens. These things do often work in proportions. Anyway, there you have it. So a pretty nice July 1st.